Let's talk about setting up a home office and the tax implications that really come with that sort of arrangements. So here's an overview I want you to pay attention to. So when we talk about setting up a home office, it's really important to understand that you will be working from home. That's really understandable. But your home office must be the primary area where you conduct your business. This is kind of important because the IRS has pretty strict requirements when it comes to actually deducting home office, sort of like having home office write-offs on your tax returns. Okay, so if you also work outside of your home office must be the place where you conduct administrative or management tasks. So you can use a portion of a room as a home office, but you must make sure the business space is clearly separate from the personal space. And again, this sort of segregation of space is really important for the IRS when it comes, like when they start auditing you, they'll be looking at that kind of segregation, okay, that kind of separation, if you will. You can calculate the percentage of your home that is used for your office and deduct that percentage of qualified home expenses, or you can use the simplified option of deducting $5 to $6 per square foot of office space up to a maximum of 300 square feet, okay? So the bottom line here is what? It's important to understand that if you have to set up a home office, you need to first understand who qualifies for the home office tax deduction in the first place. Again, you can claim the deduction whether you're a homeowner or a renter, it doesn't matter, or you can use the deduction for any type of home where you reside. It can be a single home, it can be an apartment, it can be a condo, it could be even a houseboat. You cannot use it for a hotel or other temporary lodging. So the home office deduction rules also apply to freestanding structures. So you can use a studio, garage, or barn space as your home office as long as the structure meets the exclusive and regular use requirements, okay? Regular use requirements. So when we talk about exclusive and regular use, that means what? The space you are using for business must be used exclusively for conducting business. For example, using a spare bedroom as both your office and a playroom for your children likely makes you ineligible. So be very careful there because the IRS is very strict there. There are two exceptions though. So if you provide daycare services for children, elderly, 65 or older, or handicapped individuals in that part of the house, you can probably seek claim business deductions as long as you have a license, certification, or approval as a daycare center under a state law according to the IRS. So this is kind of important. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. Now, let me give you the steps you need to really follow if you need to set up a home office and really pay attention to the tax implications. So the first thing is you want to pick a space, okay? Your home office must be the primary area where your business activities take place. If you spend most of your time elsewhere, your home office must be the place where you conduct administrative or management chores, assuming you don't make, let's say, substantial use of any other fixed location to conduct those chores. And so when we talk about picking a space, we're talking about the arrangement, we're talking about the convenience here, we're talking about also the legality of the whole arrangement. So your desk, computer, filing cabinets, and the shipping area, if you have one, should be all part of your home office space. So you can use a portion of a room as a home office, but be sure the personal spaces are clearly separate from the business space. That's what I was talking about earlier in terms of a segregation of space, okay? And now let's talk about storing inventory. If you use areas in your garage, basement, or attic as storage space for your inventory, you can add it to your home office space to take the deduction. You cannot deduct your entire garage though, basement, or attic if you use only a portion of that space to store inventory. So the solution here is that you can use duct tape. You can use it to set the boundaries of the business portion of your garage, basement, or attic. That way, if you're ever audited, the IRS agent can actually clearly see where your home office space ends and your personal space begins. And one thing I want to say here is that, rarely will an auditor make a home visit. Photographs of your office should suffice, okay? So you have to pick a space first. The second thing is you want to measure your home office. We're talking here about actually, geometry here. So to take the home office deduction, you should know the square footage of both your entire home, wall to wall, and your home office space, okay? So use duct tape to mark the boundaries of the business portion of your garage, basement, or attic that you use for business-related storage, so that you can clearly see, what kind of, you can see geometrically what kind of a size we have here. It's also important when we talk about measuring your home office. Be sure that you have you have something that makes sense a tool that makes sense to do that measurement so that you can convince an auditor should you ever be audited. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about setting up a home office and tax implications. To choose a method, okay? We're talking here about making sure that you are writing off your home office expenses. So you have to choose a method. There are two methods. You have the percentage of your home method, and you also have the standard the standard square footage. Okay. Now this is kind of similar to the standard mileage that we have with transportation with mileage deduction. But here we're speaking about home office deduction. So I want to first talk to you about the percentage of your home method. So you want to calculate your home office percentage. This is the fraction. The numerator, the top number, is the square footage of your home office space, while the denominator, the bottom number, is the square footage of your entire home, wall to wall. Once again, for example, if your home office space is 1,000 square feet and your entire home is 4,000 square feet, your home office percentage is 1/4 or 25%, right? Because 1,000 square feet divided by 4,000 square feet equals 0.25. Times 100, that's 25%. Pretty straightforward, okay? So that's basically, so when we talk about choosing a method, so that's the first method. So the second method is the simplified square footage method. So beginning with 2013 tax returns, the IRS began a simplified option for claiming the deduction. The new method uses a prescribed rate multiplied by the allowed square footage used in the home. So the prescribed rate is $5 per square foot with a maximum of 300 square feet. And the space still must be dedicated to the business activity as described earlier. So with the simplified method, if your home office measures, let's say 150 square feet, then the deduction will be $750. Now, what we love about this method is the simplicity, is the clarity too, right? So $750, in other words, you multiply $5 times 100 square feet. Okay, 100 square feet times $5 per square foot equals $750. And now one thing I want to say here is that with either method, the qualification for the home office deduction is made each year. So you might qualify 1 year and not the next, or vice versa. So everything reset, if you will, at the end of the tax year, and reset, if you will, at the end of the next tax year. So this is, think of it, on a case by case basis. The next thing you want to do here is to start deducting. So we're talking about setting up a home office and looking at the tax implications. And so when we talk about deduction, we're not just talking about you actually using the home office, let's say the simplified square footage, because the simplified square footage is pretty straightforward. So if you have to deduct, then you go in with the actual expenses. Okay. So if you have a home office, you can deduct your home office space percentage from many of your household expenses. So we're talking about all kinds of expenses. But remember though, because you are looking at the house as a whole, right? And the house actually is 100%, and your home office is probably 25%, 30%, or 20%, or 13 or 15 or 30% of the house, of the square footage. So you can deduct some household expenses as long as they make sense and they are directly related to your home office. Let me give you an example. Let me give you several examples. You have mortgage interest, for instance. You have property taxes. You have utilities. You have homeowner insurance, rent. So the thing here is that basically when you're paying rent and the home office is part of the structure, part of that rent should be actually allocated to your home office, right? To your business, if you will. One thing I need to say here is that if you own your home, you will also depreciate the business portion for tax purposes. And one thing I need to say here is that in general, you cannot deduct expenses such as lawn care and gardening for portions of your home not used for a business. In other words, if lawn care or gardening, if those things have no relationship, no correlation to your business, to your home office business, then it doesn't, the IRS would not allow it. One thing I want to say in general here is that you want to use common sense, right? You want to use common sense. It's not just about paying taxes. It's about using common sense and saying, okay, if I were to be ever audited, how can I justify this expense? So if you're able to actually justify that to an IRS auditor, then that's really fine. It's all about common sense. It's all about putting yourself in the IRS auditor's shoes and really sort of understanding what kind of logic the order that will follow when actually reviewing your deductions. Okay, so be very careful there. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about setting up a home office and tax implications. I want to give you a few special rules when we talk about setting up a home office and thinking about all the tax write-offs. You cannot deduct more than the net profit of your business. Okay, so if the net profit that your business makes every year, you cannot deduct more than that. So, but like other operating losses, you usually can carry this forwards into future tax years. So when we talk about null, for instance, net operating loss carry forward. So null carry forwards and carry back. So you have carry backs and carry forwards. So there is a possibility there. So the first rule is, let me give you an example. Let's say that you have actually so your home office this year was maybe $20,000, and your entire net profit was also $15,000. Was $15,000. You are going to deduct only $15,000, and the other $5,000 will be carried forward to future years. So this is totally possible. And one thing I want to say here is that you must complete Form 8829. I want you to see this on the screen right now. This is how Form 8829 looks like. So you must complete Form 8829 and submit it with your 1040 every year. Okay, so 8829, that's the form on the screen here. And it's basically expenses for business use of your home. It's pretty straightforward. It's pretty detailed too, and it has several parts. As you can see on the screen here, you have part 1, part of your home use for business, and part 2, figure your allowable deduction. So this is kind of similar to what I'm explaining to you. And one thing I need to say also is that if you depreciate your home as part of the home office deduction and then sell your home at a profit, you'll have to recapture the depreciation write-offs you took and include them as taxable income. So this is something you need to really be careful about. And because one thing I want to say here is that the IRS wants you to have a schedule, if you will, a sheet that really shows the depreciation recapture, because that will be part of your income. So it's one of those things where we always advise our viewers and our business clients, when you are about to sell your house, it's always good to actually think about the tax implications way before you start the whole transaction. Very, very important. So when we talk about setting up a home office and actually the tax implications, and if you're going to ask the IRS to allow certain write-offs, you need to keep great records. We're talking about keeping good records. Your record keeping must be stellar, and it's all about how you operationally organize yourself. It's simply because you're working from home doesn't actually mean that you are going to be a little lax, a little relaxed when it comes to your records. Okay, so record keeping is really key here. And the thing I want to mention here is that, and most importantly, because you're working from home, the IRS has a higher bar when it comes to organization, when it comes to efficiency, when it comes to record keeping. So while the home office deduction is typically not an audit trigger, you do have to keep good records. So when we talk about good records, we're speaking about nearly the most important documents. So copies of Form 1098 showing the interest you pay on your mortgage each year, property tax bills and canceled checks, utility and insurance bills. Those are quite essential also. A copy of your lease. So if you rent, so you want to have a copy of your lease and maybe certain bank statements that show your lease payments, your rent payments every month. And you also want to show documentation for any other expenses you deduct. So it's all about what? It's all about transparency. I think I said to you earlier, it's really about putting yourself in the IRS auditor's shoes and imagining what kind of questions that he or she will be asking you, and actually coming proactively and answering proactively those questions. And one thing I want to say here is that when we talk about other expenses, just make sure that the expenses are necessary and correlated to your business. Okay, So basically, if you're trying to write off certain expenses that have no direct correlation with your business, it will be a little complicated for you to convince the IRS that your expenses are pretty valid. And one thing I need to say also is that when we talk about setting up a home office and tax implications in general, please don't forget the state tax portion of things. Okay, so you are going to write off those expenses for federal taxes, but also you are also going, those write-offs will be transferred to state taxes. So just make sure that whatever you're writing off for state taxes actually are valid in your state, because state tax rules are different from state to state. Now, one thing I want to say here is that when we talk about the home office tax deduction, of course, I've already established that you have the simplified option, but you also have the regular method. I just want to say that the simplified option is really simple. As the name implies, it's really simple. You just take the rate of $5 per square foot, and you just multiply that by whatever square feet you have, and the maximum is 300. That's really this is the simplest method, and that's what the IRS recommends. Now, if you want to go the regular method, just make sure that your record keeping is pretty strong. Your records are pretty valid, okay? Because the regular method is more difficult because you have to measure actual expenditures against your overall residence expenses. And so it really means that you have to actually file Form 8829 that I showed you earlier. It means that you have to actually make sure that you keep all the receipts. Okay, we're talking about what? Everything from receipts. Okay, so it's you got to keep detailed record. So the thing here is that we're talking about equipment purchases, for instance. We're talking about electric bills, for instance. We're talking about utility bills, repairs, everything. Because if you are ever audited by the IRS, you'll be prepared to back up your claims. And the thing is that they do this audits randomly, and it's one of those things where they're constantly trying to see exactly what's really happening. Okay, but please, before I close on this conversation, please do not forget the depreciation part that I said to you earlier, the depreciation recapture. Okay, and it's one of those things where you have to understand. So if you use the actual expenses method, you are required to depreciate the value of your home. Depreciation refers to an income tax deduction that lets taxpayers recover the cost of property due to wear and tear, for instance, deterioration or obsolescence of the property. And so the depreciation you are required to take in home office deductions is subject to capital gains tax when you sell your home. Don't forget. So depreciation recapture, okay? And it's one of those things where you have to be very, 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 very clear. And it all goes back to what I said about keeping good records. Now, if those things are kind of complicated for you to sort of track, you can always use tax software. Nowadays, a lot of folks have electronic documents, so you can basically keep everything electronically and also use tax software so that you can actually track everything. And if you sell your house, or if you have to file Form 8829, the software will do it for you automatically. Or if you have to claim the home office deduction on your 1040, again, the tax software will transfer that data from 8829 to Form 1040 automatically. So this is done automatically. That's what you want to have anyway. You want to automate things. You do not want to manually track anything. Thank you so much for your attention. I really appreciate it a lot. I just want to quickly do a recap here. So in today's conversation, I spoke to you about setting up a home office and tax implications. So I gave you the overview. I give you the steps you need to follow, and now the recap. So the steps: pick a space, measure your home office, choose a method, start deducting, keep good records. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.